So what Fox wants, Scarlet, is exposure to digital media. So Fox is one of those legacy media companies that really kind of doubled down on live TV. And if you look at their revenue mix right now, they have about 90% exposure to the linear TV ecosystem. You compare that to some of their peers, even a Paramount Skydance or a Warner Brothers Discovery, which are exposed about 50 to 55%. So Fox definitely one of the most heavily exposed. They've played it pretty safe. So they've stayed away from the really expensive streaming wars when everybody was, spending billions, tens of billions of dollars on content to just kind of get streaming subscribers. They stayed away from that, but they've always kind of been shoring up capital to make this big play into digital, advertising, into digital streaming. And that's exactly what they're doing today with this Roku acquisition. It helps them build up their digital advertising business. And it really helps them win the streaming war in a very unique way because Roku is a streaming aggregator. So Roku gets paid no matter which streaming service wins. And I think that's really a unique benefit here for Fox.
I have to admit, Geetha, I'm surprised that the stock is down as much as it is, down 16%. Why do you think that is?
So one thing, Paul, is that this is a pretty big deal. So if you just look at Fox's, market cap, for instance, it's close to about 25 billion. This deal is, the equity value of the deal is about 25 billion. So definitely a really, really a big size deal from a size perspective. And more important, I mean, Fox has always been very, very good in terms of its balance sheet management. They've had, a pristine balance sheet, very low levels of debt, have always committed to, a strong capital returns program and stock buybacks. And I think people are a little bit nervous right now because they are going to be taking on quite a sizable debt load with this transaction, more than $12 billion in debt. And while they've promised to kind of maintain their capital returns, I think the street is still a little bit nervous.
Is there any reason to think that regulators might have any objections to this? And I ask thinking that it's probably not, because Fox is pretty close to the Trump administration. And this is an administration where, friends get good treatment.
Absolutely. I totally agree with you there, Scarlett. I think, the Murdochs obviously have this really close relationship with the president, with the current administration. The only thing that I would raise here is there is a little element of vertical integration. So Fox obviously owns content in terms of, news, in terms of live sports, access to a lot of live sports properties. And with Roku, it's really more of distribution, right? Roku has access to 100 million global streaming households, over 50% of the US broadband households. So that really gives them that whole distribution arm. And so regulators could make a case that this becomes, again, a case like, Comcast, where you have the cable business and you have content. And so, whether there need to be any concessions or whether, regulators are going to scrutinize it a little bit more closely.
This is kind of, I would say, the coming out party, if you will, for Lachlan Murdoch a little bit here. What's the call there? What's the thought there? Is this a management team that can pull off such a big deal?
I think they can. They've been very, very measured, Paul, as you well know, in terms of, acquisitions, in terms of M&A, in just terms of general strategy. But we know that they've always been itching to do a deal. They've done small deals much more quietly, and they've had this very eclectic collection of different assets, but really kind of spreading their bases a little bit. So they went out and they got all of these stakes in a lot of sports betting assets. Again, kind of identifying all the growth pockets, if you will. And so I think this deal, obviously it's a huge deal. They've considered it over a long period of time, and I think they feel like this, with the purchase of Roku, obviously they do get to supercharge their own advertising business pretty substantially. But then again, they also get economics from any streaming platform, right? Because Roku gets paid, they're pretty much like an Apple store. So they get that 35% cut, no matter which streaming service you subscribe to. So I think that, Fox was obviously trying to get a part of those owners' economics as well.
Is there any reason to think that someone else might come in with a higher bid? Could this result in any kind of bidding war?
So we just ran some numbers, Scarlett, and we think that the Roku. I mean, the number is actually a little bit underwhelming. So yes, Fox is paying about a 35% premium to where Roku was trading prior to all of this M&A news. But if you just compare some of the Roku profitability numbers, so just this quarter or just a few months ago, they started disclosing their advertising revenue as well as their subscription revenue. And what was more interesting than the breakout of the revenue itself was the gross margin. So you look at advertising revenue, for instance, it's a 60% gross margin business, which is really, really a profitable business stream, a profitable revenue stream. And then you kind of apply some of the multiples that peers are trading at. I mean, whether it's a Google or a Meta or even a Netflix or and Spotify on the subscription side, and we think it's actually slightly undervalued. So maybe almost 30% undervalued to some of where those peers are trading. And I think that's what the market is slightly disappointed about today, both the price as well as the fact that this was not a 100% cash deal. So only 60% of it is cash. The remaining 40% is being paid by Fox stock, Class A stock.